Yeah, I'm losing my
dollars
edge.
to your portfolio. Why would you do it? How do you do it? What's the point? Why are we even talking about currencies? Especially, this is a world, Pete, here in 2020 where people love stocks, okay? They love cryptocurrencies. They love disruptive companies and all of that jazz. Why are you coming to me with stocks? What's the point of adding U.S. dollars to a portfolio, Pete?
Right. And you know what? Why is everybody looking at fractionalized shares of stocks that are on the move, that are at incredibly high levels, or stocks that are like a flat line at the emergency room but have one little heartbeat left in them, looking for that lotto ticket play? Really, true diversification comes from, it isn't having a little bit of Amazon, Google, and Microsoft.
Sure.
That is not your diversification. But it's funny, if you take one step back, true diversification is what we're after, because that really affords you opportunity and a better long-term return. And the one thing we have more ownership of than anything, it's not the Amazon, it's not gold, it's not all the other periphery of interesting pieces, it's dollars. Because everything we trade is quoted and paid for in dollars. So we think about true diversification and moving to the next level of diversification. Now, it sounds awfully complicated because, okay, when you said add US dollars, what do I do? How do I do that? How complicated is that?
Well, you just go to the bank and you just buy a bunch of cash, right? You convert all of your savings to cash and then you put it under your bed. That's how you buy dollars, right?
Well, yeah, but so you're either, well, the one thing on that, and that's interesting you say, because the one thing about that, and I know you're kidding, is you either own dollars in the bank or dollars under your mattress. One pays you a fraction of interest return.
Sure.
The other makes for a little bit of a lumpy sleep experience. So neither one of them diversify you. So what you used to have to do to take this component partially out of the mix was rather, we talk about taking ideas to execution, how we do that quickly. There's no easy way to take dollars out of that portfolio in an easy fashion. There's a lot of selection involved. There's a lot of waiting involved, and there's a lot of disconnect. So let's make it easy. And I think we're going to talk about true diversification here and how we do it in the simplest way possible.
Yeah, and I'm glad that you brought up, okay, there's this idea in stocks where I could buy Amazons and Teslas and Apples and all these stocks that are screaming higher, and then I can diversify with Pete's flatlining stocks that are, cheap stocks that could maybe hit it big, and that's diversification. Not in the slightest, because what you want is something that I always say zigs when everything zags. And
Great
so
point.
When stocks move lower, Pete, and you have your Amazons, Teslas, and your Kodaks and these companies that are trying to get off of that flat line around $1 or lower, everything's going to move lower. Okay, so there's no scenario where the stock market is moving against you and you have reduced risk by buying other stocks. It doesn't happen, and diversification is absolutely, it's honestly the easiest way to manage risk. Everyone talks about hedging, and you can sell calls, you can do this, or you can just buy something that zigs when everything else zags. And what's particularly interesting about this US dollar product, not going to the bank and burying a bunch of cash US dollars
You will
under your
let me
mattress.
know. You will let me know when you do that, so I can.
Pete,
so
all the cash that I have.
I can use the furnace route of the rats to get it in
You
your
had to-
apartment
you
and
had
clean
to
you out.
You had to send me US dollars yesterday because I don't even have enough money to go
Yeah, and I don't
buy
want
groceries.
I don't want the complaint again is that I haven't seen Venmo money in months from my adopted father.
I haven't
That
gotten
was
a
hurtful
Venmo
yesterday.
But what's interesting about this form of buying US dollars, specifically at the small exchange, is it's almost diversified within the diversification you're seeking. What I mean by that is you're going to US dollars to get diversification from your stock trades, from your cryptocurrency trades, and all of that jazz. But this is a US dollar product that is diversified in and of itself. It's not a matter of, okay, I want to get currency exposure for this diversification in my portfolio, and now I'm going to buy dollars against euros. And then now I'm kind of with the single foreign exchange rate I'm liable to just what's going on in the Eurozone specifically. No, getting US dollar against these 7 currencies, Pete, is diversification within diversification. It's
Right.
like Leonardo DiCaprio going to sleep in that one movie. You're getting 2 forms of it here. And this is the
Out of
way.
all the movies you don't watch, you watch that.
That was a good movie.
What was it called again? I don't even
Inception.
remember. Inception. Yeah.
Yeah.
Oh, unbelievable.
You didn't like that one?
Oh, I think he's a great actor. I thought that was the dumbest movie in the world.
Oh man, that was a good one.
But this visual
really
is so good in terms of talking about selection dilemma. Boy, depending on the day here, I want to diversify my dollars, and I want to take some of the dollars out of my portfolio because everything I trade is basis the dollar. This is the classic example of selection dilemma. How do I even start to educate myself and make informed decisions? And every one of these, except the renminbi, is available to trade. Even the renminbi it's a little bit harder to trade, but incorporating that piece is so relevant to the world we live in today. Selection dilemma is never more readily apparent than what we're showing right here.
Yeah.
And the way to simplify that is through the product, through the small dollar index. It takes that dilemma of which one am I going to pick today, and is it the right one? The lotto of currency selection. We often wrestle with this.
Well, and how much of these should I have? Okay,
Right.
It's like if I'm buying stocks, how much Tesla should I have relative
Right.
to
Good analogy.
Coca-Cola? That's maybe less volatile. We went through all of that trouble for you as well. We weighted these things according to their GDP. You got a larger GDP, you got larger volume traded. You're seen as a more stable currency. We're going to give you a larger weighting here in the US dollar product, but not losing out on that diversification here. It's a matter of whenever someone comes to me and they're like, okay, well, how should I allocate X amount of dollars to different stock sectors and these different things? And I'm more just like, just find, if you're going to divvy it up, do a big chunk of it in just stock markets that aren't that volatile, and then have smaller pieces in little things that you like that you think could take off. And that's the piece here where it's like, all right, euro, Chinese renminbi, Japanese yen, and British pound, those are currencies that back huge economies that aren't overnight going to go to dust and send this product going haywire, but they also have volatility coming from these commodity currencies in here too. So it's a nice match of diversification that's weighted in a very sound, structured manner. And this is what, it's ending up being, these weights and these currencies, their prices and their movement. That just gets you to the movement in SFX here. You can see this blue line. It's down a couple percentage points on the year. That's because euro, Aussie, yen, pound are up on the year. Canadian dollar down a little bit lower than that US dollar piece. And so those percentage moves times those weights get you the SFX movement. And Pete, I wanted to ask you something here because this was something I was emailed a couple of days ago. UUP, a dollar ETF, pretty much the only way that's accessible for most people to trade dollars. And it's a really slow ETF that demands a lot of capital to get it moving. And so this SFX only demands a couple $100 to trade it, and it moves a couple $100 a day, whereas UUP demands every dollar of the share that you want to buy there, and it moves a couple pennies per day. Right. But UUP, Pete, this guy brought it up, he thought it was not weighted against currencies. Is there a dollar product that is just free floating that doesn't have to be pitted against anything? Or can you dive into that concept a little bit? Like, why
Sure.
would we make it more difficult, and I'm putting air quotes around that because I don't think it's more difficult, to put the US dollar against 7 currencies when you could just have the US dollar in general, right?
Do. See, but that's the point, Frankie. You do. You've got US dollar and everything in your portfolio. It's all basis the US dollar. You want long US dollar exposure, you have it. A currency trade is always 2 trades. If you're long dollars, you're short something else. If you buy euros, you pay for them in dollars. So if you're long euros, you're short dollars. Same thing if you're short yen, you're long dollars. So every currency trade is a two-sided transaction. If you're expressing opinion on one currency, you're doing that against another. We've looked at currency pairs within this: long euro, short Aussie. Every one of those requires you to have an opinion on one against the other. Is there something out there that just gives you long dollars? No, UUP is long or short dollars against a basket of five currencies. Now, that include, and I don't want anybody from Sweden to get mad at me, includes euro, yen, sterling, and Swedish krona and Swiss franc. Now, I love Switzerland. I've been there once. It's beautiful. I have no idea why Swedish krona in there. I'm sure there's some arcane reason, because this index was built in the 70s. Why Swedish krona? Do we want that? When we want exposure to currencies that are relevant to what we hear about every day in the world and that are relevant in trading our dollar. So this currency basket accomplishes that. So how do we manage our dollar exposure? This is the perfect product to do it in a very holistic and simple way. I don't want to, well, I shouldn't say that. I spent a career, but 42 years of trading, I pick and choose. And oftentimes it's not the right choice. Sometimes it is, but it's a complex trade that requires a ton of lift. Can I take my idea to execution? With 40 years between me, it's still tough. An interesting exercise that when things are on the fly becomes a challenging management, because everything's a different size. Everything's a different tick value. So that becomes an exercise that often underpaying becomes intolerable to manage. I want simple exposure. I'd like to have more dollars in my portfolio, or I'd like to take out some of the dollars that I have, because all my exposures to everything else are basis dollars. UUP is an old way to do that, a very expensive way to do that. Let's find an easier way to do that.
Anyone who has, Googled or done some research on trading foreign exchange, like if you Google foreign exchange trading, you get all these, this market / this market, because like Pete's talking about, it's these, everything has to be against something else. I think this is the simplest way to just get, like this guy who was emailing me, like, how do I just trade dollars without the, the B side of it? And this is by giving you a B, C, D, E, and F side against just that one A. I think it's the best way to get there. And what you arrive at, Pete, is just a single price for this US dollar that fluctuates with sentiment in the dollar. And I think that's what, when you're adding dollar exposure to your portfolio for diversification and everything else, this is what you want. And you can single out, this is kind of just a nice little exercise that we'll start to look into more often, is you can take any of these pieces out and see, okay, how much has the euro affected my US dollar trade? Well, it's a 34% weighting. It's a 5% return in euro this year. And so it's been a negative 1.7% effect on my US dollar investment. And so these are the pieces that make up small US dollar. And the reason why you would add it, Pete, is because it doesn't have any correlation with stocks. I looked through all 75 of the small stock 75, Pete. There's no correlation outside of 0.5, above positive 0.5 or below negative 0.5, even for the single stocks. You can say it for the stock indices, but I'm just looking to see, like, if for some reason, who knows why, Coca-Cola stock has like a real hard negative correlation to US dollar. No, nothing. There's no trends to be seen between these currencies and stocks. So if you have a stock portfolio, maybe you have a little bit of cryptocurrency, you got a little of this and that, and you think you have diversification, this is the true diversification. And that's why you add US dollars to your portfolio.